Good day everyone, my name is Marcus, and if you're new to this channel, welcome. If you're not, thank you so much for supporting us all this while. Just remember that every like and subscription goes a long way in supporting our production. Now before we dive into today's video, have a look at these disclaimers before we proceed. Okay, so in this video, we'll be talking about how natural gas equities have been outperforming FAANG stocks recently. For those of you who are not familiar with what FAANG is, do check out our previous video about how we talk that FAANG stocks are heading towards a big tech bubble and that equity investors should be wary of them. Okay, so we observed that in today's financial markets, many people have been betting on lower interest rates for a long time, and this has been epitomized best by the FAANG stocks, which have been seen as the longest durations, strongest growth assets. And slowly but quietly, many people have also ignored the trend of natural gas equities and ETFs, which have been slowly outperforming their FAANG counterparts. And on this channel, we believe that this is only the tip of the spear of supply-side inflationary pressures on the horizon that would disrupt and disturb the market's current favorable perspective of tech stocks. Okay, before we dive deep down into the analysis of why natural gas have been outperforming FAANG stocks so much, I'd like to share a quote with all of you by John Bogle, the famous investor, when he said in May 2017 that if everybody indexed, the only word you could use is chaos, catastrophe, and the markets would fail. This would mean that if everybody bought into the same fund or the same index within a certain period of time, this will only cause the whole market to collapse because there's no demand flowing in for the other stocks, which are already flooding the market with shares. The quote also highlights the need for a balance between passive and active investors that has become skewed by almost all market participants funneling money into passive and passive-oriented ETF strategies. And the problem with all recent capital flows of late is that all of these have been flowing into the FAANG stocks, and excelling as they are among the largest capitalization equities, they are effectively the market's longest duration assets as well, benefiting the universal belief that interest rates will continue to remain lower forever. But the thing is, when everyone believes in something, it is most likely to fail. So let's look at this quote issued by Bob Farrell, who was once from Bank of America Merrill Lynch. When all the experts and forecasters agree, something else is going to happen. This has been rather apt as of late, with many huge experts and fund managers such as Ray Dalio, investing giant Warren Buffett, have all been issuing their warnings about another upcoming stock market crash after all the hype has died down, after the government has run out of its supply side measures. And something else is indeed starting to happen, as supply side inflation, which is perhaps the most readily visible in commodities such as lumber prices, are up over 72.2% in 2020 year to date and up 104.2% year over year. Building on this narrative, the most out of favor commodity sector is natural gas, which I often like to call the red-headed stepchild of the already out of favor energy sector. Natural gas prices have been in a roughly 15-year bear market, which has tested the resolve, patience and resilience of any passive long-term investor trying to time the bottom. And following the supply-side inflation outlined above, natural gas prices have sprung to life, up 45.4% in the month of August thus far, which has brought their year-to-date gains to 19.5%, just a small dot in the longer-term perspective. Under the surface of this supply-side inflation story, something more interesting is starting to happen. Specifically, the leading natural gas producers, 5 of which are most commonly referred to as the RACES stocks, RACES. These stocks are Range Resources, ticker symbol RRC, Antero Resources, ticker symbol AR, CNX Resources, ticker symbol CNX, EQT Corporation, ticker symbol EQT, and Southwestern Energy, ticker symbol SWN. The FAANG stocks have been getting all the headlines, and they have been the premier group in the US stock market for the past decade and most certainly over the last 5 years. But the fact that they are particularly susceptible to inflation, rising supply side narrative that is being spun by all the RACES stocks. And while natural gas prices themselves have surged in August 2020, as detailed above, natural gas equities have been handily outperforming the broader market since the March 23 low of all equities. Over this time frame, Antero Resources has seen its shares move higher by 300.8%. Range Resources shares are higher by 169.8%. EQT Corporation shares are higher by 119.9%, CNX Resources are higher by 68.9%, and Southwestern Energy by 39.9%. And the whole SPDR S&P 500 ETF is only higher by 50.5%. So if we look at a simple compare and contrast basis, the above mentioned racer stocks have dwarfed the performance of the FAANG stocks since the March 23 equity market low. So someone looking at this video in a few months' time would say, sure, it should be expected that the laggards will outperform in a bounce off the broader market lows in an equity market panic rather than the market leaders themselves. However, the outperformance has continued even as I speak now, which seems to be the official month of the broader market melt-up. But it's worth noting that just like all stocks that are quickly growing right now, most market participants and experts have really no idea who the top natural gas producers are today versus a decade ago, where many people were familiar with the big giants such as ExxonMobil. So in conclusion, our closing thoughts is whether it's the outperformance of lumber, which is up over 104% year on year, or precious metals, or even leading precious metals producers such as Barrick Gold, most investors are cognizant of the outperformance of inflationary assets. However, they generally have not put two and two together to realize that this is a supply side story that has disastrous impacts that is just getting started. Building on this whole narrative, the supply side story, and more specifically the capital cycle, is playing out real time in natural gas prices. If you're not familiar with the capital cycle, do check out some of the links that I'll be attaching in the video below. So we still believe that this is a historic opportunity in the commodities markets because the commodity markets have always been the playground of options, traders and futures contracts. And so for an equity investor to be well vested in the commodities market is truly a very contrarian thing to do, and it's something that I'll definitely encourage, especially in the natural gas sector. Okay, so we have come to the end of today's video, and I'll be very flattered if you can leave a comment and leave a like, as well as share what you have learned with your friends below. If you are unclear with any of the terms used in the video, do check out my previous videos as well as some of the links that I've attached below. Thank you so much for supporting our channel, and stay tuned for the next video. Invest safe!
Ever since the day that you